Hi guys, it's Doc's Market Minute for Monday, January 11th. What I'm going to do is go through some index charts as well as some market leaders, or at least former market leaders, really quick here, and do a kind of around the horn analysis and see where things are at. All right, we'll start off with the Dow after a really rough week, and it looks like Monday isn't that much better either so far. What we have is a major lower high on the monthly chart, and this is a bad sign. It confirms the bear if we actually pull in a lower low on here, which is going to be near 20% anyway. So all this is doing for right now is, as long as the bear is not confirmed, this is still going to stay in the same character that we were in, which is volatile and sideways price behavior, very difficult for most people to trade. Here's the transports, not much to say here. We're well below 20% and off to a horrible start in the month of January and a bad couple of weeks so far here. Really not much to say other than very, very likely that we're going to see, before all of this is done, we're going to see a retest of this breakout here at about 5,500. This is very common to see when markets go like this. When they break out, usually they come back down. This is going to be unusually big move here, not only to the upside, but also all the way back down again, and shows what happens when we poison markets with artificial things like quantitative easing. Here's the NASDAQ composite. Again, this one's doing okay, but still a major lower high here. And now we're under 10% for the year, or actually for the since the recent all-time highs. So we're more than 10% down from the high water mark. We're closing in on the 20%, and the same thing as the Dow. It still hasn't printed a lower low yet, so we really haven't confirmed the bear. But what we have confirmed is that we're still in this sideways and volatile price action, which is going to be very difficult in 2016. Worst case, we fall into a bear, which is going to be something like this. And again, we could retest those breakout levels. This could come all the way back down to 2013 levels, right? Best case, what we'll do is, and this is, I'll say this for all the charts we're looking at, best case is that we stay in a very volatile sideways pattern throughout 2016. Here's the Russell 2000. This is a really bad sign that the Russell has come down 20% and obviously is showing what at this point is likely to be the right shoulder of a head and shoulders pattern. This could be targeting somewhere down near the 800 level by the time that this is done. This is very common to see the Russell leading markets lower. This is what happened back in 2008, as the Russell got things kicked off to the downside. While other charts were making higher highs into 2007, the Russell was making a lower high. And this is kind of what happened as we hit 2015. The Russell's lower high was much lower than everybody else's, or the other index was, and this is coming straight down here. So this has been a horrible month, week, whatever you want to call it so far for the Russell, and this is just off to a really bad start. And the Russell can move very, very quickly when it wants to. So the next 10, 20% can come very quickly. Right now, I would have to say that the Russell's already confirmed the monthly downtrend with a lower high and a lower low. So this one probably is not going to be saved. There's no way that this is going to pull into a sideways pattern. Very unlikely. All right, we'll finish up with the S&P 500. The same comments that I made about the Dow and about the NASDAQ composite is very bad start to the year with a lower high sitting up on the monthly chart. Still hasn't confirmed with a lower low yet, but still this is very cognizant of typical bear market price action. Best case, we stay in a nasty sideways pattern here, a very volatile sideways pattern. Worst case, we fall into the bear. The initial move down will be about 20%. Lower high will set up here, and then eventually we'll probably go down to somewhere near the 1600 level. Hopefully it stops there. That's about a 25% downdraft. Don't forget that the one that we went through in 2008 was much worse than that. So the news here is that don't expect quiet and trending price behavior. Don't expect this sort of boring, quiet, trending price behavior that we had for a couple of years to come back anytime in 2016. Not for quite a while yet. All right, now we've just gone through the index charts here. Let's take a quick look around the market leaders. Okay, again, these are the stocks that really pushed the market up so strongly over the last couple of years. These have been the leaders for quite a while now. Netflix has not lost trend, although it's starting to lose trend on the daily chart with lower highs and lower lows. It's pulling this down so far. But again, you can tell on the weekly chart we have not lost trend, although it's going to be difficult here with this amount of monthly energy for the Netflix to mount anything. Okay, but again, not entirely bad. Here's Facebook. Again, trend has not been broken so far. On either the monthly or the weekly charts, we're still making higher highs and higher lows on Facebook, even though things are a little soft for the past couple of months. So all things considered, this is not bad for Facebook, probably still remains strong. This is bad. This is Apple, and Apple is showing that lower high and is close to confirming the bear market entry with a lower low here. So I don't know how many percent this is down, but it's not obviously going from 130 to below 100. That's more than likely more than 20%. So here's what's going on here. This looks to be the head and shoulders pattern here. Left shoulder, head, right shoulder pattern. And that's going to target somewhere around down here before all the bloodshed is over. Very likely that's going to happen because of the fact that we're now under that important pivot level, which is about 101, and below the important psychological level of $100 a share. I'm sure that a lot of people were expecting to defend that level, and now it's punching through there and is not looking all that strong. So we're probably going to be looking at lower prices on Apple in the near future. Now, the only thing that's going to save Apple is if they blow out earnings again and just completely surprise the street, because right now all the news that's been coming out from Apple is they've been downgrading their forecast. So if they start sandbagging and eventually blow out the number, that could certainly cause an enormous short squeeze, perhaps only to create a lower high, but still, that's the one thing that could save Apple right now is a blowout earnings. Again, I don't know when that is. Obviously, that's some weeks from now, probably. Okay, so that's Apple. That's Apple. Let's see what else we have here. Amazon has been very, very strong, but has pulled back just a little bit. Maybe got ahead of itself. And what we're seeing on the energies here is that we're in a zone kind of where it's very unlikely for this to continue, just ripping higher from this point. So anytime we see Amazon getting to this point, this is usually when we have a little bit of a reaction in this. This could be, we could be stuck in a range for about a year currently on Amazon. So this is not one that I'm going to be chasing higher from here. Let's look at Google. Kind of the same story. Google, Facebook, Netflix, all of these are just having kind of a bad week, but still haven't lost trend. No reason to panic on these. Let's look at Costco. Costco is still very, very strong, still doing okay, even though it's pulled back just for a couple of weeks here. Chipotle is getting hammered on E. coli scares right now, and this one's not doing well. So this is one of the former market leaders that has just taken it on the chin. Here's Priceline, cannot get out of its own way right now, stuck in a huge consolidation pattern and unlikely to go anywhere. Here's Tesla. Tesla still stuck in a consolidation pattern. This one is very likely to start moving soon. We don't know which direction. We'll watch the price action to understand which way it's starting to move. Here's Nike. Nike has been, of course, incredibly strong for a long period of time, having the same problems as everything else. Not getting destroyed, but still temporary weakness for now. I'll just show one more here. This is Halliburton, and this is one of the leaders for the energy sector. And as you can see, even, there's no bottom right now. This is why you don't try to catch a falling knife. Once you have a stock that is below support and is in a primary downtrend, you do not chase after these. This is a very poor practice. I know of a lot of people that are trying to catch the bottom in oil and energy thinking, well, it's got to bounce. Well, it doesn't have to bounce. It doesn't have to do anything. And so this is another example of that. Just let it find itself, its bottom, and what you'll see is, first of all, the reversals start from the inside out. So what you'll start to see is eventually it'll start working higher with higher highs and higher lows. That will spill over to the weekly chart. Weekly chart will eventually start to put in higher highs and higher lows, and that will start to pull up the monthly chart. There is so much work that has to be done from the inside out for this to reverse trend and start heading higher. And you can certainly be patient and wait for these stocks to start heading higher, putting in higher highs and higher lows, at the larger time frames before it's worthy of chasing for your capital. Will you get the absolute no? Will you get the absolute low? No, you won't do that, but that's really not the point. What you're trying for is just a chunk of this kind of stuff here. You just want a chunk of that. You want your fair share in there. You don't want to catch the exact lows. Let somebody else do that. You don't want to catch the exact highs either. You just want a chunk of something in here. So this is a good example of why something that's in a primary downtrend, you don't chase after. Okay, guys, that's a quick around the horn to start off the second week of January here. Hope that helps, and we'll see you tomorrow.